The Kenya Association of Manufacturers have recommended that the government abandons the fuel subsidy program and equally lowers taxes. The umbrella body is warning that Kenyans may see a rise in food prices if the government fails to act. KTN's Brian George Otieno reports.
In what was termed as acting towards reforms in an already ailing sector, the Kenya Association of Manufacturers has raised a myriad of issues that continue to affect the sector that's grappling with shortage in fuel as well as raw materials such as wheat. Speaking to KT News, Mucai Kunyiha, the chair of the Kenya Association of Manufacturers, has raised fears that inconsistent availability of wheat and fuel demand in the country could have disastrous effects on the cost of living in the country. CAM is now rooting for Kenya to shift to India for wheat imports to avert a looming crisis in cost of bread and other wheat-related products.
India had the benefit of about 4 or 5 seasons of bumper harvest so that they are able to export. They've got some volume for export. We have had a long-standing ban in Kenya against wheat from India, I think since the 70s. And that was because of a particular fungus that they had, an outbreak there. So we were encouraging government to go quickly resolve this issue. We need to do some phytosanitary work to check if their wheat is okay and then start buying from there.
The lack of easily accessible fuel left strain on operations to manufacturers. CAM is now urging the government to abandon the subsidy program to stabilize supplies in the market, despite recent assurances from the acting petroleum CS over the continued interventions to help shield the country from the high cost of fuel.
We do know, there are businesses in whether SMEs or some of the larger ones who've had to close, just given the circumstances they were in and the times they were in. So we're saying, look, we're in very shaky times. So we really need to cushion both businesses and consumers at this time.
Many of CAM members have had challenges in accessing the US dollar from the banks to meet their international commitments in a timely manner. This is putting a strain on supply relations and the ability to negotiate favorable prices in spot markets. Liquidity in the market is critical to allow businesses to focus on their core activities of cost-efficient production and avoid panic buying. They are now calling for the opening up and encouraging interbank trading to increase liquidity in the market.
There are banks we suspect have more dollars than others, and the ability of banks to trade with each other when they need dollars is what kept some sort of liquidity in the market during tough times. Obviously, there's been a lot of demand on the dollars because the cost of commodities, even which we were talking about, the fuel we were talking about, the dollar price of those has gone up significantly, like we're saying. So that means there would be some pressure in there, and that pressure will kind of probably remain for a while.
With majority of Kenyans living on less than $1 a day, a further increase in food prices could spark off a major crisis in households which are already struggling to put food on the table. Question now is, how fast will the government act to cushion her citizens? Brian George Otieno, KTN News, Nairobi.
Now, more Kenyans are now going for second-hand clothes as the cost of living continues to soar. Now, according to a new survey, the scale of international wholesale trade in second-hand garments is estimated to be between 2 and 4 million tons traded per year, and it's increasing exponentially. Mitumba traders are, however, a worried lot as the ongoing conflict in Ukraine has equally affected their supplies, a trend that may see prices spike.
Currently, we are facing a big problem because of the pandemic. The effects of the pandemic, we are not able to get a good supply like before. We are encountering problems with the shipping. For example, some shipping lines have hiked their prices to very, very big margin. It's becoming very difficult, but we are also in communication with the government. We are requesting our government to soften or to ease the burden of duty with the Mitumba traders. One of our biggest challenges is the duty. 40-foot container is costing us a whopping $18,000 just to have one container enter Kenya. So the burden is also transferred to the small-scale trader and even to the last person. So those are the few challenges that we are facing after the ban was lifted.